Hey, what's up, guys? Welcome back to another trading video. I've been gone for a while, I know, but I'm back now, and this video will be a silver bullet strategy video. I'm going to show you guys how to, uh, enter step by step, how to actually use the model. Couple of my students actually are a little confused when it comes to this model, and they always wait for me to take it live. Again, I do live trades every single week. On YouTube and Kick, so I'll drop my Kick link in the description. And if anyone has questions and you want a one-on-one private mentorship, message me on Discord or Instagram, and I'll be happy to help you. So yeah, let's get into it. The silver bullet consists of three main confluences, which is a liquidity sweep, market structure shift, and a fair value gap. Now, if you guys don't know what those are, go to my bootcamp and I go step by step on all those three confluences, and I teach you guys how to, I show you guys what all of those confluences mean, basically, right? So if you guys are confused, go to the video, suggested video up top, and watch and start on the liquidity bootcamp, and then go in order, and you should be able to understand the concept completely. So yeah. Every day at 9:30 in the morning, 9:30 a.m., you're going to, this is Eastern Standard Time, so you're going to mark out your highest point and lowest point before 9:30. So the lowest point before 9:30 was, like here, over here was 9:12, was this low, and the highest point was this high over here at 8:18. I took this trade today, and I made around 1.1K. So I'll show you guys exactly what my thought process was, and I'll show you how to enter, right? So liquidity was swept on the bottom, right? Now we already got the first step done. Liquidity was swept. We're going to wait for a market structure shift, which is a reversal in the market, right? This gave us a fake out over here because it didn't give us a fair value gap. Price went up, gave us a leg. This is a leg. This is the market structure point. But over here, it got swept. It got shifted. The market structure got shifted, but there was no proper fair value gap, right? Now, you can still, I marked this out, and I was like, okay, this could be the fair value gap, but the flaw in this was it was too choppy, and I didn't want to risk entering. And I trusted my gut, and I was correct. I didn't enter at this fair value gap. I kind of waited. Price came down, stopped traders out. Came back up, consolidated a little bit, but I was like, okay, what are the chances it can happen twice? So once the market structure shift happened on this leg over here, I entered on this fair value gap down here. This fair value gap consists of 3 candles, 1, 2, 3. So 3 candles with no wicks in between, no interruptions, no orders have been filled or placed in that candle, right? So this black candle over here came down and tapped just the tip of this fair value gap rectangle that I marked out. I entered my trade, and it went straight over the liquidity, and it kind of went over all the way. Okay? Now, I'm going to show you guys exactly how it would look like using the path tool. So basically, let's say we're going to enter at a long position. We know our trend is doing something like this, okay? We're going to mark out the lowest point and the highest point of our chart. So the highest point would be right up here, and our lowest point would be right over here. This is sell side liquidity, and this is buy side liquidity. We are going to be trading the silver bullet from 9:30 a.m. in the morning all the way to 11 a.m. in the morning, EST. I don't know about London session. I don't know about, sorry, not session, London time. I don't know about Asian time, but this is Eastern Standard Time. If you guys want to convert it, go on Google and search 9:30 a.m. EST to London or whatever it is, wherever you guys are in the world, okay? You mark up your high, mark up your low. You're then going to wait till either price, you're going to wait till it either sweeps sell side or buy side liquidity. In this case, let's say swept sell side liquidity. Okay. Next, you're going to wait for a market structure shift. Now, our first market structure point we're going to point out is this over here. This leg up is a market structure point. This is called a point of interest. This is where price has to break this line in order for price to then reverse direction to the upside, right? Let's say in this scenario, it didn't make it easy for us. It went up and came down and went up and came down. And then eventually, price makes a high, then a failure to create a lower low, right? The momentum has been lost and breaks above this point of interest over here. So this point of interest gets broken. We delete this one. And now we wait for the entry of the fair value gap. A fair value gap shows up after the market structure shift has happened. Or it shows up before it, but we can only enter on it if the market structure shift happened. In this case, usually, in my experience, it happens before the market structure shift or right on it. So I'm going to go here and mark out a hypothetical rectangle of where the market structure shift placement would be. We would then wait till price, let me grab the tool real quick. We would then wait till price taps into it and then starts making higher highs and higher lows all the way to the opposing liquidity. Okay, so this is exactly how your entry model should look like. You don't always have to target the high. You could target the half of this. You could target this liquidity point up here. You could target this up here. But in my opinion, being safe, I would target this leg over here. Okay. This is an easy 1 to 2 risk to reward, right? Let's go over it again. We had to mark out the highest point of the market before 9:30 and the lowest point before 9:30. Price would then come up, do whatever it can do, doesn't matter. We have to wait for either buy side or sell side liquidity to get swept. In this scenario, sell side liquidity got swept. It kept making lower lows and lower highs until eventually we got a market structure shift, a fair value gap formed, and an easy entry. It allowed us to get an easy entry off the fair value gap for a long position. That's how it should go, and that's what happened here. You can kind of make it relate this to this. It kind of looks the same. As you can see, it kind of looks similar. And that's exactly what happened over here, okay? And I think this is almost the same exact, yeah, it's like 1 to 2-ish, around there. Okay, so that's basically how the model works. Now, I'm going to show you guys the second trade I took at 2 p.m. and I actually failed. And I'm gonna keep it real with you guys. I'm gonna keep it real with my viewers. I don't bullshit. I'm a real trader, or I like to think I'm a real trader. I keep it real. I don't like to be this type of guru that only shows the wins and not everything is sunshine and rainbows. I lost twice today. I won once. I lost twice, but my win was more significant than my loss. Okay, so over here at 2 p.m. I marked out the high point, which was this. Oh, sorry, no, not the high point. I think the high point was here. Yeah, this is the high point, and the low point was around down here, which is a pretty far distance, right? So I was like, okay, I'm gonna put my take profit around this zone over here, and then see how it goes. Okay, so price swept liquidity to the upside. It gave us a market structure shift. A fair value gap gets tapped in. I entered at the fair value gap over here. Price came down for a bit, and then just stopped us out at the top. Unfortunately, it was a loss, and I ended up losing the Judas swing as well last night. And the Judas swing, you guys can go on my channel and check it out. The Judas swing is all over my channel, so you guys can go ahead and see that strategy. I'll touch upon it again next video. But I wanted to talk about order blocks and premium and discount and equilibrium and stuff like that. So next video I make, I will definitely do something like that. But for now, I wanted to refresh everyone's memory and let you guys know how the silver bullet works by ICT. Okay. Anyways, that is all for this video. Again, if you guys have questions or if you guys want a one-on-one mentorship, private mentorship, you guys can DM me on Discord or Instagram, and I'll be happy to help you and assist you guys. Or just ask free questions. I'll be happy to answer any questions you guys have when it comes to trading, brokers, funded accounts, whatever it is, prop firms. I'll be happy to help. Anyways, see you guys in the next video. Peace out.